Let's
welcome
us.
Lawrence Rowe of Target Energy.
Hey there,
Good morning,
Lawrence.
gentlemen. How are you all?
Very good. We were just wondering if you were on your yacht in the Houston Ship Channel today.
No, I think it's a day to be a landlubber and watch all the action from on shore.
Oh, man. Well, it's funny. We were talking about that amazing story there, you know, and I hate to make light of it. Obviously, it's turning into an environmental mess. But how the price of gas went up 10 cents overnight here in Florida, and supposedly could go up to $4 a gallon because of Houston. Or at least
I'm impressed with that. I hadn't realized our influence extended quite as far and quite as quickly.
Yeah.
That'll settle down a little bit in the near term. But it's causing some congestion here. I think they said last night there were 90 ships at anchor or waiting to get access to the port.
Yeah.
Waiting for it to be reopened. I'm not sure if that's happened overnight, but it certainly is having some effect downstream, as it were.
Yeah, well, you know, what's funny about that is that, you know, of course, obviously, the big story was, you know, people trapped on cruise boats that were just kind of floating out there, you know, waiting to get back to Galveston or Houston. So, yeah, it's turned into an amazing story. How long will this actually be a story, per se, Lawrence? I mean, and you guys just get back to doing what you do, of course. Has nothing to do with you because you're a land drilling company.
No, it certainly doesn't affect us. The stories are it's always, you know, unfortunate when an accident like that happens, and it is a transportation accident more than anything else. But
right.
It does, you know, bring back memories for people, and it's you know, I think the best thing we can do, you know, collectively is clean it up as fast as we can, and then just sort of get on with things. In the meantime, it does have some sort of flow-on effects as the port is closed for a while, but hopefully that'll rectify itself pretty quickly, and we'll get on with things. Certainly, from an onshore explorer's point of view, there's very little impact on us.
So a long way away from the Houston Shipping Channel is the Permian Basin, and how are you guys doing?
Yeah, it is a ways away. No, we're doing very well, and thank you for asking. Target's had a pretty good run recently.
Unbelievable run.
Yeah, it's been great. We've been able to advise the market a few weeks ago that we were seeing record production numbers. We've got a very good well that's underpinning that, and whilst that's eased off a little bit, we're still seeing very good rates from the well, and we are continuing to see very strong production levels for the company. So we're quite excited about that, and that's basically what we have done and what we're doing right now. We've just completed our next well, the Boa number 3. We cased that we reached TD on Friday. We've cased that well for production, and we'll be testing that within the next couple of weeks. The rig has already moved on to our next well, the Boa North number 4, and that should be spudding in the next few days. And we should be fracture stimulating our Wagga Wagga number 1 well in by the end of this week. So we've had some very good news recently with those production levels, and the activity that's occurring right now is going to set us up, I believe, for some more very good news in the near future.
Wow. Yeah, that sounds great. You talk about this quarter. Are you guys, what are you, calendar? What is your year?
The financial year in Australia runs from July through June, so it's 6 months out of sync with
okay.
the US calendar year.
Okay.
Our quarters are just the same, but this quarter is going to be a very strong one for us. January through March, we'll have a quarterly report coming out in late April, which is the sort of typical timing for that, and we'll be able to sort of put more information in there. In the meantime, we will be keeping the market informed both in Australia and here in the US as to what else is happening. So there's lots of good news coming up, I think, and we'll be making sure that we get that message out as far and as wide as we can.
That sounds great. Now, you drill around Perth as well, right?
I have been involved in that in the past. Target does not do that. We work only in the U.S. But yeah, there's activity in to the north of Perth in the onshore Perth Basin, also the offshore Perth Basin, and there's been some wells drilled offshore just to the southwest of Perth as well. It's not quite as productive as the Permian Basin, but there's still a lot of activity there.
Huh, that's interesting. Very interesting. Well, you know, it sounds amazing what you guys have managed to do in, you know, in a relatively short span of time, if you look at the whole history of all of it.
Well, we've moved fairly quickly.
Yes.
Recently, and I guess we're building momentum, which sort of increases the rate of news and hopefully the rate of good news. We probably had a slower start than we'd liked a few years ago, but we sort of kicked that into a higher gear last year and certainly this year. So it bodes quite well, and certainly the activity levels are increasing.
Hey, if anybody has any questions for Lawrence, feel free. Give us a call, 340-1590, 340-1590. If you're out of the area listening on the web anywhere in the world, it's 772-340-1590. And that's questions for Lawrence Rowe. Michael?
Well, the Sydney number 2 in West Texas, which is outproducing what you expected. It's producing almost 500 barrels of oil per day, or more than that.
It peaked or was producing at over 500 barrels of oil equivalent per day. That's mainly oil, I might add, but we had some gas with that, and it's also quite wet gas. In other words, it's liquids rich, so that attracts a premium price. So we're quite happy with the gas. But that well
Incredible.
had some exuberant production, and we announced the well its initial production, I think at about 250 or 270 barrels a day, and then it confounded us by going up to over 300, and eventually over 400 barrels of oil a day plus the gas.
So this is all in the Fairway project.
That's correct.
And you have other wells in that project to bring on.
Yeah, we have a number of, I think we have 7 producers in that project area at the moment. Hopefully with the Wagga Wagga frac and the completion of Boa 3, we'll be adding those to the list. And then we have another 8 wells to drill this year, at least 8. I can pretty much guarantee it'll be more than that, to add to that total. So we should have the best part of 20 wells by the end of the year. There's a lot of activity at Fairway. The results have been very good. Sydney 2 has been excellent. Not every well will be like that, of course, but it gives us very strong encouragement. You may see a Sydney number 3 coming up sometime this year to augment the Sydney 2 discovery.
So what is your goal as far as barrels? I mean, the 500 is outrageous, but realistic for you for the 7?
I think if we were able to, I guess we've talked in the past about doubling production from the start of the year. I think we're a ways away towards that already. But if I can double production from where we are now, and I have every reason to think we should be able to do that with another 9 wells. In fact, I'd be disappointed if we don't do at least that. But that's the goal for us in this particular campaign, and then to sort of build upon that. But Target's in good shape at the moment. The levels of production are very pleasing for us. It's generating, we're adding to our reserves. It's certainly generating more cash for us. And to continue to do that and put ourselves in a position at the end of the year where we're generating substantial amounts of revenue and have added to our reserves, I think that's a very good position to aim for the end of the year, and then to really just keep that going.
Gee, you want to buy a radio station? Oh, no, I'm just kidding. Oh man, we could change. Yeah, we could change the call letters to, what is it, WOIL or something like that. Anyway, but
I think that's an extremely good idea.
That's nuts.
Hey, if an airline can buy a refinery, why not?
Yeah, you're right. That's right. Yeah, it was a Delta, didn't Delta buy the one in
Delta
Philly?
bought the old Phillips 66.
Yeah, that's amazing. Yeah, that is amazing. Charles, do you have any stock questions to ask Lawrence?
No, but the stock is acting much better. It's 455 bid offered at 490, so the spread is closing a little. It's still a little bigger than I like to see it, but
because it's relatively new.
Right, but
U.S. trading is very new.
The fact of the matter is that it is closing up the gap a little, and it is moving higher. We have a couple of people, one of which we thought was going to call in today and ask Larry Lawrence about the company, but yeah, it's acting much better.
That's good. Well, I just the whole concept of looking at a lot more drilling in the Permian. What about Louisiana? How's that working out for you, Lawrence?
Okay, we still have some more work to do on that. We have a number of assets in Louisiana, but the main one that we're working on it's called East Chalkley in Cameron Parish, and we're just preparing a procedure to do some work in one of those wells, and that should see an increase in production there. So that one's still on the books for us at the moment. I guess our focus has been on the Permian, but we do expect to be moving things along in Louisiana pretty soon.
Well, realistically, you have to focus on the Permian. I mean, let's get real.
It gets all of our attention
sure.
right now. Yeah,
sure.
That really is our sort of primary focus. But I think that Louisiana asset is one that's can perform a lot better than it has been, and it will get our attention, or it has, but it's just moving up the priority list a little bit.
It's a good story, and Lawrence, for folks who don't know much about Target Energy, when did you open the doors here in the U.S.?
Okay, the company itself was started at the very end of 2006, and we started immediately drilling in Texas. The company was set up to work exclusively in the United States. So we've been around basically since the beginning of 2007. We started with conventional assets, and then a few years ago we turned our attention to the resource plays and chose the Permian Basin as our area of focus in the future, and that turned out, I think, to be a good decision. So we began as a conventional exploration company looking for conventional targets in 2007 and 8 and 9, and then we switched to resource plays. It took us a little while to get into the leases that we're in. We were looking for ones that we thought really had some potential, and again, I think we were successful in that. And in the last few years, we've really been focused on getting that Permian Basin project moving forward. But as I said before, we haven't lost sight of some of our other assets as well.
Okay, take us back to Oil 101 here. You're talking about resource play, and then the other is what, just straight drilling? What's the difference?
Yeah, conventional assets or conventional oil exploration was usually looking for traps where oil and gas has been expelled, it's migrated, then it's been trapped somewhere and accumulates, and then hopefully you can locate that, drill into it, and produce it. The resource plays don't rely on the traps per se. They actually chase the source of the oil. Why go looking for it where it's gone if you know where it originally was expelled? And that allows us then to work to eliminate one level of risk in the process, that you can drill in a region. So I know I've got oil shales here, or I've got gas shales. I know I've got oil and gas within the section. So my risk now is not will I find it or not, but can I find it and exploit it in an economic manner? That starts out in some areas with vertical wells. Target has done quite well with the Wolfberry play, where we drill vertically and we'll frack up to 11 stages. Elsewhere, and this is probably the most common procedure now, or increasingly so, is the use of horizontal drilling, where people have very sensibly said, well, I can drill through an oil shale, and if the oil shale is 300 feet thick, I can drill a hole 300 feet through it. And I'll get a certain amount of oil, but it makes a lot more sense to get into that shale and then just basically go along the shale for up to 1.5 miles. And you've got an awful lot more hydrocarbon-bearing formation that'll contribute to your production. And that plus the fracking process has allowed companies to get some very, very good wells. The key now for a lot of us in the Permian, in terms of horizontal drilling, is to get the costs down. They're working very hard on that. None of this work is cheap, but we're seeing techniques being developed, pad drilling, the long offset horizontals, sort of fine-tuning the fracking process, and frankly, fine-tuning the entire process in terms of facilities, equipment. Some companies have purchased their own or have their own frac crews, their own drilling rigs, and they're looking for any way they can to improve the bottom line, reduce the costs, while they efficiently exploit that reservoir. So the resource plays, I guess it's a term that sort of covers a lot of different types of plays in different areas, but it's fundamentally where you are looking at the source rather than chasing the expelled oil and gas.
Okay, we have a listener who apparently was a little shy. Didn't want to go on. Name was John. Why not, the question, why, actually there are a couple. Why not split the stock? Right now it is ADR 100 to 1. Why not lower the stock? So that is a question from John. Lawrence?
Okay, I guess we hadn't really thought about that. That's something that I guess would also involve us working on the Australian side of the share register. As you know, the ADRs are bundles of Australian shares. Honestly, we haven't thought about it. I don't think that's something we'd probably want to do at this point. I think we're fairly happy with the structure that we have, and we will see it. We'll certainly expect to see us building back more momentum in the stock.
Again,
I've actually talked to John about that, and the point was not to change the capital structure of the company, but just to by cutting the stock in half or by 4 or so, you're essentially with a lower price, you tend to have a lower spread. And I think that was the main point of that issue being brought up. If you have a 40-cent spread like you do right now at $4.50 to $4.95, if it's a $1.20 bid offered at $1.30, it tends to just make it a little easier for people to rationalize. All the story being what it is, it just makes it a little easier to buy a stock that has a smaller spread between the bid and the ask.
interesting.
And again, it's only arithmetic. It's not like it changes anything about the company or the capital structure. It just means there are twice as many shares at half the price, or 3 times, or whatever that number actually is. So I don't think he's looking to see a change in the capital structure, just a change, again, as I said, a change in the spread between the bid and the ask.
Again, for maybe some investing newcomers, newbies, the ADR 100 to 1, what does that mean? Explain that.
Okay, the ADR program, the ADR is American Depository Receipts, and it's a methodology that allows foreign stocks to be traded in the United States.
Gotcha.
The ADR acts like a wrapper, as it were, around these foreign shares. So for Australian, for Target Energy shares, which trade on the Australian Stock Exchange, we'll take 100 of those shares and we'll bundle those into a single ADR wrapper. So when you trade Target shares here on the OTCQX through the ADR program, you're actually trading 100 Australian shares each time you buy or sell one of the ADRs.
And of course, you're also eliminating the currency risk, because if you wanted to buy the shares in Australia, you'd have to have the currency.
Indeed, it allows you to trade in the stock without having to reach into the Australian market, and as you say, enjoy the vagaries of the foreign exchange.
The vagaries.
It's not even so much that there's that much risk in the movement of our currency and their currency. It's just a matter of, having it be inconvenient and involving more fees, and accepting just a little bit more risk. So, it's a great way to facilitate the trading.
Lawrence is right. I mean, it's a pain when you're going from one country to another or investing in one country or another. Yeah, I agree. It makes perfect sense. So
Plus, the fact of the matter is the company, even though it's Australian, is operating here.
Right. Exactly. Well, Lawrence, where do you see your company, say, at the end of your fiscal year here?
At the end of our fiscal year, which is the end of June, we'll have at least another 3 or 4 wells under our belt. So we should see an increase in the production from where we are today, and obviously sort of work continuing within the Permian. We are looking at other opportunities. There's a couple of things that we have our eyes on elsewhere in Texas. We're looking for other interesting projects as well that will have relatively low risk and will be oil focused. We think there's a few good opportunities out there, and we're looking at those. So we're hoping really by the end of this financial year for us to be in a position where we can talk about more activity and success in the Permian, but also that we're stepping into new projects, or at least one new project in Texas, and I hope you'll see some more momentum and increased production in our Louisiana asset as well.
Would you be looking at any potential, say, joint ventures with any of the big boys, or not quite in the future?
We'd never say no to that. I guess my history, or our history back in Australia, is you tend to work in joint ventures on a regular basis.
Mm-hmm.
We certainly would look at every opportunity that comes up. We'd have no problems joint venturing with people. I suspect that with some of the big boys, it could be like catching a tiger by the tail. But nonetheless, if the project has the technical merits and we can find a way to get in that is sensible for us, then yeah, we'd certainly look at it.
Interesting. Yeah, that's very, very interesting. Michael, questions for Lawrence?
Well, it looks like you're close to that. You're on your way to 1,000 barrels a day. It shouldn't be long now before you're hitting that mark.
That's the plan, Mike. We're certainly heading in the right direction, and I think just a matter of just watching this space, really, as we continue that work and see that production climb.
And so the Wagga Wagga is really next, right? That's
that should be
now.
fracking. I hope over the weekend. That'll obviously got to flow back some of the frack water, so we won't get an instant result. But within the we'll have some idea once we fracked it, and it shouldn't be too long before we start seeing the oil and getting some idea how well it's going to perform. But there's been some very good results in a nearby well that look quite similar, so we have every expectation of a good result there as well.
Lawrence, how long?
Well, your news has exceeded expectations, hasn't it?
It has. It's nice to be able to say that, and we try to say it as loudly as we can.
There you go.
It happens, but we've kind of exceeded our expectations with these wells, and hopefully we can continue to do that.
Lawrence, how long is that timeline, when you start fracking a well, as to when you actually, see some potential in that well? Is it a week, 2 weeks, a month, a couple months?
It can be a few weeks. It depends, obviously, on the size of the frack and how many stages you've stimulated. But typically, you'll put a lot of water into that formation as part of the fracturing process. Once that is complete and you drill out the plugs, that will start flowing back, and the first thing that will flow back will be that water that you've originally put in. It doesn't take too long normally for some oil to appear, but you can have 30,000 barrels of water that have gone into that formation, and you're going to need to get quite a few of those back before you see a representative flow of the oil and the gas. So sometimes it can be a few weeks.
Interesting. Wow.
That's good work.
Yeah, it sounds like you're ahead of schedule, which is great. That's always good news.
Yeah. No, everything, all the lights are green right now, so we're quite.
and frankly, companies that underpromise and overproduce tend to be looked upon very favorably.
Well, congratulations on the good work.
Thank you
and
very
much.
much.
Thanks so much for sharing everything with us.
We're delighted to talk with you guys, as always.
All right, Lawrence. Hey, thanks a million for being with us, and don't be a stranger. Let us know your new successes here.
You bet. We'd be delighted to do that.
Okay. All right, Lawrence Rowe, Target Energy, Houston, Texas. Of course, drilling in the Permian and also in Louisiana as well. Michael, very,
Well, the
very
stock
interesting.
symbol is TEXQY
Mm-hmm.
in America. That's the ADR. And in Australia, it's TEX.AX. So there's the Australian, and then the American ADR, which is 1 to 100 shares in Australia. In other words, 1 ADR is equal to 100 Australian shares.
Right. Okay. That's,
You know what I've always wondered, and I should have asked Lawrence, but it's such a ludicrous question, I'm assuming. You know, what happens when we turn all of this underground into Swiss cheese? I mean, does it collapse in on itself like a sinkhole in Florida, Greg?
Don't even, coming from California, we don't even want to think about that.
Yeah.
Yeah. Interesting.
Okay, well, the market's given up about half of its gains.
Uh-huh.
The Dow was up $40.42. It was up over 100. The S&P is up about 4.5. It was up about 12. The bonds, the 10-year note, which was trading at a yield of 277, is now trading at 273.7. So that's 2 basis points down. So that means bonds are up. So stocks giving up part of the gain, bonds gaining. The NASDAQ, which was up about $30 or $40, is now, up a couple of pennies. The oil is up, the gold is up, the copper is up, the nat gas is up. But as I said, stocks are fading a bit. And that's why they call it Turnaround Tuesday.
There you go.
Well, in particular, we like this CEF, the Canadian gold and silver.
Right. And wasn't there another one, Mike? A Canadian oil sands, COSWS.
Yes,
that
the
we
Canadian
were talking
oil
about
sands.
also. Okay, so that's a straight oil and gas play?
Yes, the Canadian oil sands is COSQY. I think. I'm not sure. Don't hold me to that. I'm not sure of the symbol.
Yeah, I have it as C as in Charles, O, S as in Sam, W, F. Trading 1978, bid offered at 1981.
Yeah,
down about down 2 cents on the day.
This stock pays a very nice dividend, and it's very cheap compared to all the other oil companies.
Right.
It looks cheap, COSWF.
Right.
Where are they drilling, guys? Are they?
They're in Alberta.
In Alberta. Okay, yeah. Well, they around Edmonton.
Oil sands.
Yeah. That's oil country. It's the Canadian Rockies, you bet. Yeah. Wow. I'm sorry. Yes. PrincetonResearch.com. I'm all right.
We have a Rule 17B.
Yep.
Target Energy pays Princeton Research $2,500 a month to do investor relations.
All right.
That's a requirement, the 17B.
Yes, sir. Yep. Well, go to Princeton.